All right, good morning, everyone. We'll get started here. Okay, U.S. markets had a decent little trading session until maybe the last half hour, which you can really see that we lost about half of the day's gains, about six points on the S&P just in the last half an hour. Obviously, we look at the last half an hour as being one of the most important parts of the day, but we'll have to see if there's any follow through on the back of that today. We had a 4-day losing streak going into the day on the S&P, and obviously we've had a nice little pullback there, but a lot of the global equity markets, specifically ours, has been quite resilient in the face of a pullback on U.S. equity markets. You can see here in Asia, we were down mostly across the board, kind of finishing toward the lows of the day, and some of the indexes. The Nikkei's actually managed to finish higher on the day at the moment, but not such an ugly day there. We had BHP that missed expectations yesterday. Really didn't come off all that much on our local market, but traded off pretty nicely, and in Australia almost 2.5% there, and really just very little to go on in Asia, mostly light trading volume, and no specific particular sector outperformance or underperformance. Okay, today yesterday afternoon in the auction we got the ARI trading statement, full year, with they guided headline earnings per share of 17.10. Expectations were for 16.22, so that's looking like a little bit of a beat there. The share's obviously been trading quite well. And then we have Heineken out this morning with the first half operating profit of 1.33 billion euros. Expectation was for 1.34, so a bit of a tiny miss there. Market data today, we've got SACPI at 10 o'clock. We've got the NBA mortgage apps. We've got existing home sales. We've got crude oil inventories. And then we've got the big thing of the day is the Fed's releasing their minutes from the July FOMC meeting at 8 o'clock tonight. One thing I'd like to just mention quickly is the CPI number that's coming out at 10 o'clock. That's going to really be the expectation is for the basket to be outside of their target range of 3 to 6% inflation here locally. So I think this is going to be really, really important that we watch this one going into this. A lot of the interest rate sensitive stocks, especially if we get a hotter number than expected, some of the interest rate sensitive stocks can really continue to come under pressure. They're already under pressure. You already see the South African 10-year yields up above 850 now, which is a huge jump over the last couple months. But I think this is really going to be important today. We could have markets really moving quite hard. The rand could move hard. So that 10 o'clock announcement for us specifically is going to be major. So don't forget about that today at 10. All right, let's jump into the maps. All right, first thing I wanted to have a look at here is the FTSE. Look at the FTSE quickly. I'm just going to shorten this up a little bit here so you can see we're looking at a bit of a head and shoulder pattern that's kind of set up here, that we really kind of broken down out of as of yesterday's session. I know it's not the most classic head and shoulder setup you've ever seen, but definitely a head and shoulder pattern to an extent. Will give us a target of about 150 points on the breakdown here in the FTSE, so definitely potentially still some room to fall. I also want to show the Aussie chart here, and we're going to jump into a 30-minute chart, so that you can have a look at a potential head and shoulder setting up here as well. You can see we've really got real support here around 37,900, where we touched yesterday on the lows. We bounced up here nicely, and I think I don't think that we need to necessarily get all the way back up here to the same height as the left shoulder for this to be a nice head and shoulder setup. In fact, I think that we've kind of already maybe done enough. So I think it just draws a line in the sand here. This 37,900 level is really critical. If we can drop that level, then I think we will trade down to support here at 37,450. So let's watch this closely. 37,900 is the big level that I want to watch going forward over the next few sessions in the Aussie. All right, there's a couple stocks on the slightly longer term chart, the Standard Bank and Nedbank, which you can see here that they're starting to flag out a little bit here. We had a nice little run up. These things have tried to pull back, haven't been able to pull back. They've put in some monster volume the last 2 days, and they're starting to flag here. Put in a little bit of a bull flag. Look like that could move higher potentially. You can see here Nedbank, same sort of thing. Not as nice of a flag setup, but and not as vertical, and sorry, it's not as much of a big of a range, but same sort of pattern nonetheless. So I think both of these potentially could make a little move to the upside here out of these flag patterns in Nedbank and Standard Bank, and the volume on the last couple of days, which have really been down days, has been astounding. All right, let's look at Imperial. I'll back this out just a little bit so you can get more of an idea here, but the bottom line is, on a closing basis, this thing's definitely broken out. If you want to run it from the wicks, you can also run from the wicks. Either way you look at it, we've broken out here on Imperial. And I think, this thing, this thing's just been in a narrowing little wedge for pretty much forever. However long you want to draw this period out for. But that little consolidation that's been going on, it's really been happening since the beginning part of the year. So I'd have a look at this. I mean, I think there could be significant room to the upside. Obviously, it was a much better than expected trading statement. I think a lot of people may be short of this thing specifically because of the weakness in the rand, thinking that it was going to be adversely affected by that. So just be careful of this one. It could definitely move hard to the upside. All right. Vodacom, same sort of thing that we talked about with a couple of the others, maybe putting in a little bit of a flag pattern here, and it's really a pattern that we're seeing a lot of right now. A lot of flags setting up. Obviously, we've had a nice push up, and we've had a bit of a small drift lower. Haven't moved significantly lower, so you would think, obviously, that it's not a surprise that we're seeing this pattern set up a lot. I would watch this closely, to see, obviously, the underlying market's going to have to give us support for these things to move higher out of these flags. All right, Mr. Price, I wanted to show as well that we got a shocking close to most of the retail sector yesterday. I think that's something I want to watch really closely today. You can see here we drop below support that we talked about yesterday, Mr. Price, and we did it on the close. I mean, this thing was trading at $130 yesterday. And then the next thing you know, it's closing down at 125.44. And we really finished pretty much close to the highs of the day. So we saw that on a few shares. We saw it on Woolies. We saw it on Mr. Price. We saw ShopRite fade really hard after maybe slightly better than expected earnings. All the entire retail sector faded hard. And like we've been talking about the last couple of sessions, every time we see yields bouncing here, these interest rate sensitive stocks are likely to really get hammered. What's interesting is that certain stocks on our sector that are kind of interest rate sensitive haven't really been getting too hard, but the most interest rate sensitive ones have been. This is another one of those. Growth Point. This is actually probably the best chart that I've seen in a while. This is the best setup that I've seen in quite some time. Right here at 2350, an absolutely monster level. You can see how important this level is. I mean, someone that doesn't know anything about charting can see how important this is. 2350, right where we closed yesterday, is really the bottom end of this range. I think if this thing falls below 2350 and can stay there for a bit, I think you can freaking short this thing with your life. It's really an incredibly definitive level. I know it's come off a lot over the past the past month or so. But this is a massive level nonetheless. I mean, if we do drop it, and we can only drop it for 15 minutes, and we kind of get back above 23, you could end up catching a lot of guys getting short. But I think if you're watching the South African bond market, we continue to see yields go higher. I really wouldn't be surprised to see this thing drop 23.50 and really maybe even trade down to support, which would probably be all the way down here where we really broke out from. All the way back in June of 2012. which is down around 21.25. So just watch this closely. I think this could be one of the better setups over the next day or two, whichever way, if it ends up holding this level or if it ends up breaking down. All right, the last one I'm going to have a look at here is on the LSC. This is Rolls-Royce. The Rolls-Royce, you can see the very significant level here at about 11.10. We came down yesterday, tested it. Last two out of 3 days we've tested this and kind of held it. Hasn't really been able to get that much of a bounce. If we drop 111.10, this thing's probably got, I would call it a good, let's just draw a rough line here, a good £1.20 to the downside here, which would be a good 10% in Rolls-Royce. So watch it around 111.10. If we break down there, this could be a lot of room to the downside. That's it for today, guys. Thanks a lot.